Hi guys, this is Crypto with James talking to you today about investing in the bear cycle. Guys, I'm going to say some stuff that's obvious, but I'm going to say some stuff that's required. Um, because this is a strategy that I've used. This is a strategy that most, in fact, all successful investors at one point or another have used in terms of dealing with a bear cycle. So I'm going to get into that in a second. I updated the spreadsheet, the first 26 coins I spoke about on the channel. If you had invested $100 into each of these when I released videos about them, you were still holding all of it, you'd be in profit for 13 grand. At this point, by the way, you should not still be holding all of it. But obviously, we're in a we're hurtling towards a recession. That will be confirmed soon enough, and we're in a bear cycle. These are opportunities to make good money. They always are. So I've been banging on for about 6 months about build your list of coins you're excited about. Do your research, take your time, and figure it out. And if you don't have the time, you don't have the energy, you can see the coins I'm getting into in the bear cycle if you go to copymycrypto.com. And like I said, the bear cycle is the chance to make real money, build wealth. Like a bull cycle is great, and you might make some quick profit, but bear cycles where you make the strategic. You make the investments that change things for you. So if you want to see what I'm getting into, you can click the link in the description and check it out. All right, guys. I'm going to talk about something that I've actually spoken about on my channel, like on my site a few times, and I'm going to talk about something that really needs understanding, right? Recessions are normal. We've had many of them. I'm going to run through all financial markets here. These are recessions that we've seen across the last, these are historical charts. These grey bars represent recessions. And the point being that investing during a recession generally ends up being highly profitable. This is the NASDAQ chart. And you can see the bottom of the recession was that the NASDAQ in total was $1,377. The NASDAQ, as of like last year, broke above 15,000, sorry. So it's more than a 10x on the NASDAQ. You know, when we see gold's, in fact, I'll talk about gold last because it's slightly different. Dow Jones, Dow Jones Industrial Average. This is actually a very, very, very useful chart in general. When it peaks out, it usually takes 6 months for a recession to kick in. Just so you know, it peaked out on January 4th of this year. So, plus or minus 2 months, we usually say. But add on 6 months from January 4th, and you're looking at June 4th onwards. But if we look at when the recession kicked in 2008, we all remember that. You know, the market tanked, and the Dow Jones bottomed out at around 7.5, and last year broke above 35k. It's 5x on the Dow Jones, and this is true of every market. We can look at gold, diamond. Recessions around 2008, we saw a decline for like a reasonably significant decline, certainly for gold, for diamonds, and it still ran up. We saw the same thing with households in recessions, where there was a decline, bottoms out around in the historical crash of well, the banks screwed us, dropped to 208,000, but now the median sale prices for houses in America is 428,000. That's a doubling. Gold works slightly differently to everything else. Tends to have a bit of a tougher time initially in the recessions, and then kicks into gear pretty well, and usually has a rally in a recession. But even then, gold bottomed out in the previous recession in 2008 at $730. Right now, gold's priced very close to like 2k, nearly a 3x. Bitcoin over the course of time, you know, we had the recession, like we had the bear cycle in 2018, and that bear cycle lasted a while, right? but we saw bottoming out around 3.2k. This past year hit 63, 69, so it actually ended up being about 23x. Crypto has bigger gains. But what's consistent is investments during recessions are key. They're where profit is made. And everyone's probably heard the old adage of buy low, sell high. And a recession is the perfect time in that regard. Now, a quick just reminder, when we're looking at all of these, all these charts have one thing in common, which is they are on a consistent upward trajectory, regardless of recessions. And we've had many of them. We are on a consistent upward trajectory on all financial markets. Now, part of that inevitably is down to inflation. More money is printed, more money is spent, right? But that's going to continue to some degree. That's always going to continue. Households, again. And the old adage of buy low, sell high, right? Easier said than done, but that's mainly because of emotion. Wholeheartedly, it's mainly because of emotion. The strategy can be difficult as prices reflect emotions and psychology and are difficult to predict. That's what's tricky about a bear cycle in terms of knowing when the bottom is. Because the bottom comes when people are done selling, when people have finished panic selling. So the bottom of this bear cycle, everyone's got different perspectives. Some is based on TA, some is based on historical percentage drops, some is based on feeling, some is based on people being in the markets for that long that they have a feeling about these things. All of these things, any one of these could be right. Predicting the bottom is pretty much impossible, right? But you don't have to do that. You can use tactics, you can use moving averages, you can use dollar cost averaging. Because this is how money is made. And what you generally do in terms of dollar cost averaging, because I know some people have heard that term, people might not know what is meant by it. So Bitcoin right now is 28.3k, right? Probably is going to drop more. So let's round it off. Let's say it's 28k. You've got a pot of money, hypothetically, right? And this is financial advice. I'm just giving my perspective, right? Of my plans, effectively. So Bitcoin's 28k. So you've got a pot of 56k, let's say. So you can divvy that up and dollar cost average into the cryptos you're excited about. You believe wholeheartedly in 4 months, 6 months, they're going to still be here. In 10 years, they're going to still be here. The ones you long term are really bullish on. So if you've got your 56 grand, you could buy one Bitcoin at 28, right? Then, if the price drops and it continues that drop and it drops down to, let's say, 20k, you've still got 28k in the sidelines. And again, you could split that, but you could use 20k, buy another Bitcoin. Or you could use, 14k and buy 70% of the Bitcoin. And then if it drops to, let's say, 14k, you've still got 14k left, and you could buy a whole Bitcoin. So you've ended up with 2.7 Bitcoin from your 56k. Instead of 2, if you'd have just lumped all your money in when it hit 28k. So the purpose of dollar cost averaging in is that when you're hitting, particularly when you're in a recession, you're hitting a bear cycle, prices drop more. And because you know, and you have to be aware, you can't predict the bottom. So divvying the money up and going, right, this is my allocation for the amount of money I intend to invest during a bear cycle, and then starting to split it into percentages you're comfortable with. And you usually use more money at the start and leave more, because you require less money as prices drop. And that's the thesis behind dollar cost averaging. But what you do have to bear in mind is emotion. And there's a lot of emotion at the moment, more than I remember. I don't remember seeing this level of emotion in the last crash. I don't remember seeing this level of emotion when the BitConnect scam, came to fruition. The Ponzi schemes completely collapsed. I don't remember this level of emotion. We're seeing it everywhere. I've seen a lot of these sort of messages, and this is not a dig or anything, but seeing a lot of messages of, no one will trust all the crypto projects after what happened to Luna and UST. But it's not true. It's not true. Because you've got to think long term about what's happening. No one will probably trust Terra again. That's probably true. Well, most people won't. There'll still be people that believe in Terra. There'll still be people that believe in the team. But the majority won't, because the majority have been burned. So if they collapse the UST, they figure out how to sort out the circulating supply of Luna, burn it all down to the ground, effectively, restart. If they released another stable coin, no one's going to jump on that. So, but it doesn't mean all of crypto's dead. It just doesn't. Right? You've got institutions piling in. But not just that. You've got US government looking at CBDCs. That has to be done on a blockchain. You've got Australian government, the UK, Europe, all of them looking at CBDCs. I don't want a CBDC, but you can see it coming. But for that to happen, they need a blockchain. Once they've got that, they can start filtering in and start accruing other assets on top of the CBDC that they are then able to manipulate. That's a scary prospect. But it's not going to. But that is not. But that is dependent on blockchain technology. So we're not going to see crypto die. We're going to see stablecoins regulated. That's inevitable. Or CBDCs outright replace. But crypto isn't dead. And emotions are overwhelming the market right now. Understandably. If you got burnt by Terra, it must have been fucking awful. But this is a market where we saw the biggest asset in the market do a 23x from the base of the bear cycle to the peak. Sorry, from the base of the bear cycle to the peak of the bull cycle. So, altcoins. We saw Ethereum, by the way, do like a 40x. I think it was from 100 to 4 grand or thereabouts. So, there are still tons of assets, tons of cryptos that are quality. And the Terra thing is upsetting for a lot of people, but this is part and parcel of crypto, and it's shouldn't be, but it is. But it's not. It doesn't mean every crypto out there is like that. Dollar cost averaging in, not being fearful, being the opposite of the rest of the market. During the recessions, whether it's the Nasdaq, the Dow Jones, the S&P 500, the gold, whatever it is, the people that made the money are the people that invested throughout the recessions, throughout the bear cycles. Because the long-term view on financial markets, as the fiat currencies around the world continue to grow, is that these financial markets have to grow. They inflate more than the inflation of the fiat currencies out there. And the buy low, sell high thesis is simple. It's difficult with emotion, but it's simple. This is why so many YouTubers or so many people in the space have been talking about building the list of cryptos you're excited about. So many people have been talking about that because we know bear cycle is coming. Most people at one point or another have said this. I started saying it 6 months ago. So we know this has been on the horizon. A recession is coming, and that's going to be a worse financial situation for everyone. Not easy. But if your intention is to be in the crypto market, be in it when it's at its weakest. Because when it's at its strongest and you start putting in money again, you're going to end up entering into Bitcoin at 60 grand. Maybe it runs up to 100, probably should. But if you got in at 10 grand, you made a 10x. You're getting at 60 grand, you've not even doubled your money. But it's also a real emotional thing, missing a price. Really is. Like, and I even have it, but like we all have it. Like, got in on this coin at 20 cents and now it's down to fucking 10 cents. Like, but if you've divvied up your money accordingly, you probably entered in a stronger, with more money at 20 cents, but that doesn't matter if you've still got money allocated in case it dropped. That's all dollar cost averaging is. And I'm saying this, and I know a lot of people that might be watching this are well friggin' aware of this. I'm not saying new information. I'm just trying to sort of reiterate right now that the sentiment is wrong. The market sentiment is off because it shouldn't be fear. It shouldn't be panic. It should be excitement because this is where money is made. And it's just putting in the time, putting in the energy, finding those coins. And if you've got the ones you're excited about, set up a plan of action. How are you going to invest? What are you going to do? All it needs doing. And dollar cost average. Figure out what percentages. If you've got 5 coins, you've got 20 grand. Figure out how to spread that so that you've got, let's say, 3 different entry points for each crypto. Then from there, you probably dollar cost averaging pretty damn well. Like I said, guys, not necessarily new information. I'm hoping it's helpful, and I'm more just. It's sort of one thing I wanted to talk about, just because I've seen so much emotion in the markets right now, and I get it, but it's counterproductive to what you need and what everyone needs right now. So hopefully it was helpful. Like the video, subscribe to the channel, hit that bell notification so you know when new content is coming out, guys. Stay safe out there, stay calm heads, lack of emotion is key. And yeah, that's it. And if you've not got your list of bear cycle investments, then come to Copy My Crypto. You can see the coins that I'll be getting in on during the bear cycle. I'm like I said, this is the time. This is the time. This is the money. And I can't wait. So yeah. So join me and I'll share everything with you. Anyway, take it easy, guys. Bye bye.